So let's see what the first rates actually throw up as. And it's a green start for sure. You are seeing 0.5% of an uptick. We are well above the 19,500 print. And given that yesterday we saw a breach of 19,400 on the downside, this is definitely a sure relief. Hindalco, Tata Motors, ICICI Bank, DRL, Asian Paints, TCS, Infosys, they're all a sea of green. HDFC Bank recovers further. A 1% uptick is what you're seeing on that stock. ICICI Bank, and I think it's the first time this week that you're seeing any green on ICICI Bank. 935 is where that stock is, a gain of about 0.6%. I want to see what Axis Bank is up to, considering that really got pounded yesterday. That weakness continues. So Axis is still lower, 0.5%, 990 is where that stock is. So let's see what happens on those rates going forward. Let's also talk about Reliance, considering that too has been weighing heavy on the markets. Let's see whether the recovery in the market is rubbing off. Actually, nothing. Reliance is doing nothing right now. 23.16 is where that stock is. Absolutely flat, with at best only a marginal uptick coming in. So flat as flat can be. Let's talk about all the movers then in trade. And let's see what Hero MotoCorp is up to. They've had a good count of 13,688 bookings for their Charisma XMR. The deliveries are going to commence this month, so that's one stock which is in focus. Bandhan Bank came out with a strong Q2 update. The CASA ratio has seen an uptick, and that stands at 38.5% versus a comparable of 36% on a sequential basis. Deposits as well are higher by nearly about 13%. There's RBL Bank as well, wherein the deposit growth has come in as the best in about 8 quarters. RBL is holding up 2% as we speak right now. PNB too, the advances have seen an uptick of about 14% nearly. That stock is well higher by about 1%. And similar is the picture for a JNK Bank, for a Suryoday SFB. All these have posted very strong quarterly updates. JNK as well, holding up 2% higher as we speak right now. Check in on what Marico is up to, because they are the ones wherein the volumes for the second quarter have grown in low single digits. 3% is the kind of gap down that you're seeing on Marico, and maybe it's going to be rubbing off on the likes of a Dabur as well. Let's see what Dabur is up to. Yeah, Dabur as well starts off flat. Navin Fluorine, that stock as well starts off in the red. The search is underway for an MD replacement. There's a Jeffrey downgrade as well coming in after the current MD put in his resignation. That stock has gapped down about 3.6%. as we speak right now. For ABB, there is a upgrade from Axis Capital. They're recommending a buy on this one. L&T Finance, the retail loan book, has continued to scale up. So that's another stock which is in focus. And then Divi's Labs. Bernstein has initiated an underperform with a target price of 30.64. Divi's as well starts off in the red as we speak right now. But Kunal, what are the first rates that you are punching in? Index-wise, a bit of a relief for sure.
Yeah, definitely a relief for the indices. Nifty back above 19,500 mark and the Bank Nifty back above 44,000 level. So that should ease off some relief for the option traders as well. Now, in terms of opening trade, Reliance Industries, the stock which made a strong comeback, I would probably expect that the stock has formed a medium bottom for itself around this 2,300 mark. So that's a stock which I would be extremely keen to buy as well as recommend to clients.
Okay, it's RIL, the stock which staged a bit of a comeback in yesterday's trading day. Kunal believes it's good for a buy today as well. Let's find out what Naresh's thoughts are on the market open this morning around the 19,500 mark. Kunal, Naresh, what is your take in terms of your first trade that you're punching in?
So that's a buy on IndiGo, a reversal confirmation about 24.20. It looks like setting up for a move to 25.50 in the short term.
Okay, let's welcome on board Saurabh Mukherjee and talk about what he's making of the market right now. Saurabh, hi, morning. Good to have you on the show. Where's your cricket jersey?
I think this is the Marcellus jersey. I think this is the best we can do. As the World Cup gets underway, we might move towards jerseys of various nationalities.
I'm sure. But, Saurabh, typically around such big events, you always look at the business of things as well, right? The business of cricket, and considering this is such a mammoth entity, India is the solo host this time around, it's coming after a while. Any beneficiaries you think that in the near term could be good plays?
I think what's astonishing is the fact that in spite of the ticket prices, every ticket that I've heard of is gone. Not only are tickets gone, hotels are rammed, plane tickets are booked out, and I think this goes to show how wealthy a certain strata of Indian society has become. I would say not just the Indian upper middle class, but in general, in the big 10 cities of our country, levels of affluence and disposable income have reached close to first world levels, which is why you're seeing ticket prices which are comparable, I would say, to say a football World Cup held in the Western world. So heartening to see this level of affluence in India's big cities.
Absolutely. And one has seen that affluence rub off on all the data points as well that we've been getting off late, be the property registrations, be the auto sales, all of it. You think this premiumization theme, Saurabh, is here to stay for a long? Because a faction of the market also believes that what you could bet on right now is the rural recovery, because they are the ones which have underperformed for the last over a year or so.
I think there are three underlying drivers of wealth for, I call it the octopus class, right? Roughly a million super rich individuals. Three underlying drivers. Firstly, obviously the stock market, right? The stock market's up nearly 18, 19x in the last 20 years. Anybody who's invested serious sums of money in the stock market over the last 20 years is on a rocket propelled ship. Secondly, as the country networks, roads, airlines, broadband, the India stack, even small businesses who are competitive, small businesses in small town India are locking into the broader national economy. And it's very interesting that in our small and mid cap portfolios, some of the best companies are no longer in the big 4 or 5 metros. They're in the next 20, 30 cities. And the rise of an integrated national economy is driving an SME class. And the third aspect, I think, is the rise of what I call global capability centers. We have roughly 1,600 GCCs in India. These are companies and these are global companies, India offices, but this is also, say, a Google or a Microsoft's programming centers in Hyderabad and Bangalore. Our reckoning is, Aisha, that this number is growing by 20% every year. Pretty much every day a GCC is opening up in India. That itself will create around 4-5 million jobs, affluent, high-income jobs. And this combination of the whole world's, not just IT services, but payroll, finance, marketing, audit, all of that work being done in India will create a deeper layer of affluence in Bombay, Bangalore, Hyderabad, Gurgaon, but also increasingly cities like Coimbatore, Nashik, Indore. These cities are becoming big hubs for global work. So three massive drivers of affluence for premium India. The lower income strata is a different story. I think the FMCG company struggles you were highlighting a few minutes ago tells that part of India is struggling. But upper middle class India, octopus India, as I call it, is absolutely booming.
Oh, yes, indeed. And even with the kind of inflated prices that we've seen for hotels, airlines, etc., not just for the World Cup, but people are really willing to shell it out for those great experiences. Which brings me, Saurabh, to just get in your quick take as well as to how you're looking at, say the food aggregator space or the entire consumption sector really getting a big pickup, of course, from a big event like this and, sort of sustaining that momentum. Do you think that is looking achievable? Because, say, in 2019, it was the likes of a Jubilant that really took the lead when it came to a big event like the World Cup. But now it seems to be a lot of other players as well that are dominating this space.
So in the food aggregator space, I agree with you that there'll be a volume uptake is all but inevitable given the scale of the World Cup. But the challenge, I think, in food aggregation and generally much of the digital space in India is bargaining power, is competitive advantages and the ability to translate volumes into profits and cash flows. I think that remains a struggle for food aggregators generally and the digital online space in our country. Where we think the biggest profits will be made is supplying the critical inputs which go into the food industry. So, for example, in our small and in our mid cap portfolios, Little Champs and Rising Giants, we are big shareholders in Fine Organics. Fine Organics supplies the emulsifiers, a significant number of the additives which go into biscuits and snacks that we have on a day-to-day basis. It goes into our fizzy drinks that we have on a day-to-day basis. That's where the big kickers will come. Companies which have established almost dominant hammer lock into the raw materials which go into our foods. And if you see Fine Organics' return on capital, it's around the 35% mark, suggesting deep dominance of some of the essential inputs which go into the stuff that we eat on a day-to-day basis, our snacks and our fizzy drinks.
Okay, Saurabh, what about the entire chemical space and even pharma for that matter, the CDMO manufacturers, etc.? Which are the stocks you like there?
So I think what's been very interesting, this is the first time I've seen this in a long time. May, June, July, August, the Chinese really came after the Indian pharma, spec chem and agrochem industry. I haven't seen China come at India this aggressively since COVID. The RMB was devalued. The Chinese government gave subsidies. The Chinese government gave profit guarantees to Chinese exporters who were willing to take on the Indians and push through price cuts. So our reckoning is from May through to August, China pushed through basically a 25% price cut on pharma, agrochem, and spec chem. September is when the Chinese have thrown in the towel from what we can see. So I think the second quarter results for the spec chem, agrochem, and the pharma industries will be affected by the Chinese price cuts. But September, the month of September, we've seen prices bottoming out. And I'm hopeful that when both the pharma companies and the spec chem, agrochem companies announce their results, they'll give us some sense as to why the Chinese threw in the towel in September and what we can expect to see on the prices front. My hope is the prices have bottomed out, and therefore I think the second half of the year will look good for many of our larger holdings. For example, we are large shareholders in Divi's Lab, in Alkyl Amines, in GMM Pfaudler, in Poshak, and we're hoping the second half of the year will bring good news as the price action seems to have bottomed out. Quick disclaimer, I am a shareholder in these companies through Marcellus PMS, so are my parents, and so are thousands of our clients.
Saurabh, just a follow-up on Divi's Lab, because you own that and there was an initiating note that came in from Bernstein this morning with an underperformed rating and 18 to 20% downside. They are worried about the fact that Divi's is in these segments which is actually seeing slower growth versus rest of the companies as well. The valuation is at the premium versus the rest of the peers, and the fact that the approval rate for large volume drugs has been a bit constrained. Your view?
So last year, when Divi's halved through last year, in January of this year, we quadrupled our position in Divi's. And we did so broadly for three reasons. First reason was we could see in the newspapers that China and America were going at each other. China accounts for 70-80% of the world's production of APIs. India accounts for just 10%. And our point of view remains that market share will shift from China to India. We're seeing that happen. We reckon Divi's is the biggest beneficiary of the big pharma American companies shifting their supply chains away from China towards India. Second thing was Divi's third plant went on stream last year in Kakinada. We had some visibility basis our primary data research talking to the big pharma companies in America. We believed then and believe now that the Kakinada plant will fill up rather quickly with American demand from say the Pfizers, the Mercks, and the Glaxos of the world. We've got good visibility that the Kakinada plant is indeed filling up with contrast media production. And the third piece is the sheer amount of dominance Divi's have. We have seen no other Indian firm in API be as comprehensive and as competent in identifying APIs that they can dominate and then backward integrate production so that they become the largest and the lowest cost producer in the world. Murli Divi and team have done an outstanding job in that regard. In the 20 years the firm has been listed, and we have good reason to believe that will carry on. So we quadrupled the position back in January. So far, it looks like it was a good move, but hey, let's see what the second half of the year brings for us.
Divi's quadrupled the position, right? Just repeating what you said, Saurabh, reiterating.
Yeah. We quadrupled our position in Divi's in January after the stock had halved through 2022.
Okay, it's quite interesting. I'm curious to know what are the other positions that you've taken? Any concentrated bets in the last month or so?
As we've made public in our small cap portfolio, Little Champs, we built a position in RHI Magnesita. I think we perhaps discussed that once before on your channel. Again, in Little Champs, we've taken a significant position in Rainbow Hospitals. It's a Hyderabad-based maternity and pediatric hospital chain, the most profitable hospital chain in India by our view, and growing rapidly. There's more action coming. There are more Little Champs that are in the pipeline. So both in our mid cap and in our small cap portfolios, we're building some concentrated positions in other interesting companies who we think will do well. Would do well on the back of, say, three broad themes. South India is booming. The whole China plus one piece is pumping up the South Indian economy. Plus, the outsourcing theme is also helping the South Indian economy grow great guns. Secondly, women. Women are now the big drivers of the Indian economy. Women are earning more than men, we believe. Women have more money in the bank than men. And increasingly, the Indian economy's employment prospects are tilted towards women. And the third piece is the premium consumption, the octopus theme, right? The fact that Birkenstock footwear sales are growing 20x faster than relaxo footwear sales. The fact that Royal Enfield motorcycles are growing twice as fast as ordinary motorcycles.
Saurabh, if I may add a little bit of a cricket twist to it, which out of a lot of these companies that you've flagged off, or stocks that you've flagged off, do you think could replicate a Yuvraj Singh like performance that we saw, the dream run in 2011 in the World Cup? If you had to pick out just one.
So look, amongst our largest holdings in our biggest portfolio, consistent compounders, we are still loaded up heavily on HDFC Bank. I've heard lots of stories about HDFC Bank and HDFC Limited. I think many of them are stories built on pure fiction. As HDFC Bank's pre-close update suggests, this bank is growing liabilities at 30%, which is quite unbelievable. In a difficult environment to pick up liabilities, HDFC Bank has picked up 30% growth in liabilities. Remember, the first 3 months of this calendar, a quarter of India's liabilities came to HDFC Bank. So we believe we remain large holders there. And we think the current environment bodes well for the bank. Plus, the integration we think will go far better than many other people out there expect it to go.
The other thing, considering sort of you do map global data points as well, wanted to understand what's the sort of silly point for investors that they must be cautioned of?
I think the area which worries us a little bit is this whole PSU capex recovery. Because our reckoning is that the fisc is overstretched. Remember, the budget deficit today is higher than what it was before COVID, and overall tax collections. So as GST collections are in decent shape, corporate tax collections are in decent shape. Overall tax collections are not growing as fast as I think were budgeted. Remember, the budget expects 14% growth in tax collections. I think that'll be difficult to come through. So my reading is after the general elections are done, there is bound to be a pullback in government spending generally. And this whole PSU capex story worries me a little bit. I think people are getting too excited about a story that simply doesn't have legs in it.
And which are the sectors that you think will be good for a power play, aka short-term plays, tactical trades?
I think that's a very difficult thing for someone from Marcellus to comment on. The short term is something we never quite understood, and tactical is a sort of oxymoron for investing, I believe. But in all seriousness, the economy overall is in solid shape. The implosion in China bodes well for India. The implosion in China will bring down commodity prices. We are a net importer of commodities. A country like us benefits from lower commodity prices. We're seeing that play out. That in turn, lower commodity prices in turn will bring down inflation, and I strongly believe we are close to the top of the rate hike cycle across the world, including in India. All of that bodes really, really well for equity investors.
Okay, Saurabh, what about your outlook then when it comes to the PSU and defense space? Do you think investors have a chance to get an LBW in PSU and defense?
So as I said, that's the theme. The broader PSU capex theme worries me a little bit. If you see the data, I think roads, defense spending, and power. In general, the government spending on these three areas has doubled across the last three budgets. Under India's underlying tax collections don't support this sort of heavy spending on government-driven capex. As you're alluding to, the market has got very excited about many PSU capex stories, and I think there's a real risk of overheating and overexcitement in the broader PSU capex story.
What about IT? You think IT growth will still remain under covers now?
So we've discussed this before. My view remains that the rise of AI and the rise of cloud is a is a windfall, for Indian IT services companies. It is very difficult now for a Fortune 500 company not to shift to cloud and AI. That should bring bucket loads of work for say a TCS, where we have a large holding. I appreciate that Accenture has reported a soft quarter, but I think the broader structural story over the next several years to come will be, as the Western companies shift to cloud and AI, it's Indian companies will help them make that migration.
Before we let you go, Saurabh, do you think FIIs will make a comeback in the second innings?
The FIIs with whom we talk to, they are continuing to invest with us, and we've got good visibility that there are more FII clients who will sign up with Marcellus. And I'm not making this up. I haven't seen this degree of optimism and aggression in terms of FIIs talking to us and negotiating with us to enter the Indian market.
What about the domestic consumption play, Saurabh? Is there a reverse sweep for a boundary?
Domestic consumption, mass is, I think, in trouble. Class, high income consumption is going to reverse sweep, perhaps even reverse sweep for a 6. But I think mass consumption is a struggle. We'll see that play out again in Q2.
What about the mid and small cap field? Still a good pitch there, you think?
Selectively, PSU defense, and the PSU theme generally, I think mid and small caps seem to be overheated. But if I look at many of Marcellus's small cap holdings, they have profits have compounded at 25% over the last couple of years. Share prices have risen barely 3-4%, Aisha, suggesting that there is plenty of upside there in many of the small and mid caps that we've invested in.
All right, good to have you with us. Thanks so much for hitting it out of the park and sharing with us your views on stocks, sectors, as well as the overall market. All right, how's the trend for the market looking at the moment? Continuing to hold out by about 100 points or so. You've got the mid and the small caps, by the way, which continue to look as cheery as the frontliners. And just checking in on which sectors are supporting, and you could say it's across the board. So a helping hand from media, IT, real estate, and even the PSU banks, as well as the Nifty bank index. They're all holding out quite comfortably in today's trading session. But let's also connect then with Dhirendra Tiwari, now joining in, Head of Research at Antique Stock Broking. Thank you so much then for taking time out and being with us. I just wanted to start off by getting in your take on valuations for the capex theme sectors, because without a doubt you've seen that skyrocketing, but still you're seeing value in some of these sectors. What do you believe are the factors influencing this, and how are you looking at this sort of catch-22 situation?
Yeah, thank you for giving me the opportunity. And the valuations have certainly gone up. So there are 3 pockets. It is the industrials, railway, and defense. Stock prices have moved up significantly. So if you put these 3 buckets, industrial stocks, some of these are MNCs, some of these are large. They are the ones which have gone up significantly. And so is the story for railway and defense. So certainly the valuation have gone up, but the overall outlook remains very promising. And therefore, we believe that despite a significant re-rating, the story is still far from over. And there can be meaningful outperformance. Money can be made in the sector.
Okay, so that was about the capex theme and the kind of valuations that you're seeing. But within capex itself, and it's become a very large theme, right, from manufacturing to your industrials, which are power related, to defense and other segments as well. Which within this do you think is the most likely to see further gains, even railways for that matter?
See, valuation, just to add a point earlier, most of the defense and railways, particularly, the stock prices have gone 4-5 times. But one has to also understand that they were deep value stocks. So one company, if it has gone up, re-rated by 3-4 times, point here is that to start with, the valuations of such companies were extremely low. So what we have witnessed is that whenever there is slightest of catalyst and trigger, the valuations readjust to the normal valuations. So I would assume that most of the defense and railway stocks were extremely undervalued, and therefore the run-up has been quite steep. So here still, if you look at most defense and railways related companies, defense mostly will be trading at something like 22 average P multiple based on 25 earnings, based on our earnings estimates. And so will be railways. Railway stocks will also be more or less at about 20 to 24 P multiple for 25 earnings. Now, if one looks at the capability of these companies, it's very commendable, and they are doing extremely well in terms of new product market opportunity has meaningfully risen. Therefore, these two pockets, despite the run-up, I would say that there is a good amount of scope for outperformance. Within industrials, the story is more driven by long-term growth. And there also we can see a few of segments doing extremely well and giving the opportunity to invest.
That's so interesting that you actually, made the point that defense and railways is actually undervalued. Many believe it in the near term, at least, the best could be behind us, and many contemplating whether these sectors in the near term are reaching frothy valuations. You think to get the meaty part of the returns, one will have to definitely elongate the time horizon for both defense as well as railway stocks.
To give the point again, if there is particular company, the largest company in this space was valued at maybe 30,000-40,000 crore market cap, kind of assets that they have, the kind of growth opportunity they have, the kind of competence, monopolistic business environment they have, is extremely undervalued. That should not be the valuation to start with. Therefore, I would say that when we see there is movement towards indigenization, movement towards putting more money towards capital expenditure, the valuation is readjusted to normalized valuations. From there, the growth is driven by the earnings and the order books. I would say that therefore one has to certainly look at long-term growth, because one leg of undervaluation has certainly gone, and now the stock performances will be driven by the order books. So we believe that maybe if one looks at 2-year, 3-year kind of investment horizon, both defense and railways and select industrials will give meaningful returns from current valuations also.
Okay, and if we had to get stock specific, Dhirendra, which are the stocks which could hit out of the park as far as this entire theme is concerned, you believe? Top picks.
So as we have written in our recent report, we have split the whole space in 3 categories. So one is certainly industrials. So industrials, we like companies like BHEL, L&T, Siemens, some mid-cap companies like Infosys, and so on. Similarly, in the defense space, we have like stronger Nordics, Diamonds Limited, BA. In the railway space, we prefer as top picks internal rail systems. We have RILs, Econ. So these are some of the best picks of the lot. And so that is where we would assume that there is a reasonable amount of outperformance in next 1.5 years.
All right. What is the sense then that you're getting when it comes to the competitive intensity? Because we have seen within this entire space, a lot of companies are winning orders by bidding at lower levels. So how are you looking at that impacting the overall margins for most of these companies?
I would say that competitive intensity is always there, but the pricing environment has improved, in fact. So if one looks at most industrial companies, when they are making power equipment or industrial equipment like motor compressors, etc., they have increased prices in recent times, and they have adjusted with fall in commodity prices also. Similarly, on the defense and railway side, the competitive intensity may be high in certain cases, and the pricing apparently may be at very competitive. But we believe that the overall, if you look at the industrial space, whether it is industrials, railways, and defense, the environment is very conducive. Demand is very strong. The order bookings are so that it is very unlikely that there is going to be pressure on price. the future, I would say that. And therefore, I believe that the margins are a function of one gross margin, which I think will be stable. The second aspect is the operating leverage. So operating leverage across companies will improve, and therefore we expect 15 to 25% kind of EBITDA growth in these spaces. So I would say margin is a surprise element in future. I would believe that profitability will inch up across all these three categories of industrial space.
It's such a pleasure having you on the show today, and I also wanted to check with you whether you're as geared up for the World Cup. You're going to see any of the matches, or at least bet on the business of cricket?
Certainly, I think everything is positive right now, and Cricket World Cup is also happening at the right time. Market is doing well. A bit of fluctuations and I would say movement in the stock prices need to happen, and they are happening. That should not be taken as any kind of worry. And I think certainly cricket world is happening at a very right time when India is moving into higher growth trajectory. And it's a good start to, I would say, that next 5-year journey.
Oh, yeah, absolutely. In fact, that's exactly what we're going to talk about in our next segment after this very quick break. First, we'll start off a conversation with the consumption boom that can happen around the business of cricket. Who's likely to benefit? Karan Tarani from Elara Securities will be joining us in just a short while from now. Okay, the business of cricket, that's what we're gonna analyze over the next half an hour on the show. And let's welcome on board Karan Tarani from Elara Securities to talk about exactly that. Karan, hi, morning. Good to have you on ET Now as always. First things first, tickets, flights, hotels, all bookings done?
Yeah, quite much. For the India-Pakistan especially.
Oh my God. I'm sure the
Hopefully,
entire
I don't know.
ET
I'm
Now...
still not sure. I'm still not sure, by the way. I don't know. But the bookings have been done. Ticket is still uncertain.
Okay, that's what I was wondering as to how did you manage to get that ticket? But anyway, that aside, we were just chatting with Saurabh Mukherjee as well from Marcellus, and he was talking about as to how, the World Cup frenzy also gives you a light and insight into the affluent India, the aspirational India, and the consumption boom thereby, right? The premiumization theme. Everyone's willing to spend whatever it takes for tickets, for the flights, for the hotels. What, according to you, are the beneficiaries that are going to emerge from the business of cricket?
So I think from a World Cup standpoint, firstly, we have to see two things are happening for the first time. One is that, India is hosting this World Cup on its own. If you look at it historically, matches for the World Cup have been held across other Asian nations. So that's not happening right now. So it's only India. Second thing is there's a clash with festive, right? So I think during festive, the mood is generally upbeat to spend, right? And you would ideally spend on other things like food and jewelry and other things, but this time you're going to spend on World Cup as well because the mood is kind of upbeat. So I think because of these two things, World Cup will see a significant boost as far as consumption is concerned. Also, not to forget the fact that, this time around, because the World Cup is in India, the time zones are quite favorable. So you are going to see a positive impact, right from advertising revenue, for the platform, Disney Plus and Hotstar, to, the Star TV network, which is the TV platform. You're going to see a, positive impact in terms of consumption around food, beverages, alcohol industry, QSR industry, online ordering, players like Zomato. So broadly, I think this is going to be a huge positive boost in terms of consumption for all these sectors. And plus, there are a lot of people who are going to go travel for the matches. So they'll book hotels, they'll book flights. So even that will see some kind of consumption boost.
And they're willing to pay through their nose just to get a seat there at the World Cup to witness the mania. So just to get right back then, Karan, to talking a little bit more about, the ad revenue potential, etc. What about the absolute value in terms of digital advertising? Because you're saying that's not going to be as high as TV advertising. Can you walk us through some numbers and how you're looking at the breakup between the two mediums?
So if you look at the overall advertising number that we have assumed, we believe that the World Cup potentially could fetch an ad revenue of close to 2,000 to 2,500 crores. The split here is going to be more in favor of digital because digital is going to grow at a faster pace. One of the prime reasons I told you is that the World Cup is being offered free of cost right now. So if you look at in the historical, Disney Plus, they've offered IPL behind the paywall. So there is some kind of impact on consumption once a piece of content is, given on the paywall. So this is a massive, piece of content. Cricket, World Cup, I think it's just, everybody follows it so passionately. So you're going to see huge consumption numbers on the digital platform, which is why, we believe that potentially you could see around 1,000 crores of ad revenue just purely on the digital platform, which is about 60 to 70 to 80% higher as compared to the 2019 World Cup. As far as TV is concerned, I think the base is quite huge. So I think we'll not see much of growth over there because, a lot of people would also want to do a catch up as per convenience. These matches are typically for around 8 hours. So you would want to, watch the first half of the match when you are traveling or in transit and the second half maybe at home. So TV that way will not see that big potential growth it has seen in the past. But nonetheless, I think 6 to 8% kind of a CAGR growth, which is almost about 15-20% higher revenue versus the last World Cup, is what TV would generate. So broadly around 2,500 at 2,500 revenue on the World Cup side.
Interesting. So you have booked your stay and flight and waiting for the ticket, but for the masses like us who don't have that ticket visibility or the fact to go, we'll all be relying at watching it at home, and we'll be ordering in a lot as well, right? What do you think will happen to the likes of Zomato, Jubilant, other QSR names which are likely to see an uptick in volumes this quarter?
So if you look at it this time around, historically we did some comparative study here in terms of the potential impact of World Cup on QSR chains. And generally, what has happened is that, for example, if a QSR company has reported an SSG growth of 3% for that particular World Cup year in terms of annual SSG growth rate. For the World Cup quarter specifically, the growth rates have been 3 to 4 percentage points higher, which means that typically during the World Cup, what we see during the entire month of World Cup, sales move up by close to 10 to 15%. So I think basis that the QSR companies will be a big beneficiary because of this incremental sales. The bigger delta has always been Jubilant, right? Because they've done well on delivery. They've always had the first move advantage, the best in terms of efficiency and lead time, everything put together. But I think in the post-COVID era, things have changed significantly. I think Zomato, has kind of caught up as far as delivery is concerned. So which is why delivery is not a moat anymore for a Jubilant. There are other players like, Westlife, Sapphire, Devyani, who are also making the most of delivery because of Zomato as an aggregator. So I think this time around, you will not see pizza kind of, seeing a sharp increase in terms of consumption because people can order other food also online apart from pizza. Nonetheless, I think pizza is a category is well suited for the larger groups, but Jubilant may not see this big positive impact of the World Cup this time around because in the competitive intensity, the pizza category is also very high. We've got many other players which have scaled up very well. So there's a lot of competition for Jubilant in the pizza category itself. So I think the bigger beneficiaries this time around will be Zomato, Devyani, Sapphire, followed by Jubilant in terms of pecking order. The other set of consumption companies that we see an uptick is the alcohol space. Specifically over here, the premium beer segment, because if you look at beer, it's more on-premise led. So I think close to 30% of beer volumes is consumed on-premise. So we believe that even beer volumes could move up by close to 7 to 8% in that particular month of World Cup. And this will again primarily benefit premium beer counterparts, like Bira, AB InBev, Sad Miller, UBL also, Heineken also to a certain extent, but they don't have a larger market share in terms of premium beer. So they'll be the last in terms of pecking order here. And lastly, it will also have a huge significant impact in terms of United Spirits, their luxury portfolio, which is very heavy in terms of on-premise, the Scotch, which is bottled in India and bottled in origin. So I think that will also see a positive impact in terms of volumes.
Okay, fair enough. And, given that a few years ago, the World Cup really, when it came to the food space, belonged to Jubilant, which was one of the leading players. Now there's a lot more players within this space. In terms of individual categories as well, do you believe that there is going to be a lot, people are going to be a lot more spoiled for choice, and the likes of a Zomato and Swiggy are definitely going to be at the forefront of this?
Said, Zomato will be the biggest beneficiary, Zomato and Swiggy both. because people are not going to just order pizzas. I think there is biryanis, fried chicken, burgers. In the pre-COVID times, what actually happened is that in terms of pure experience from a customer standpoint, pizza was a compelling product, right? But in the post-COVID era, people have got habituated. They've kind of transitioned away from just, ordering pizza and ordering other products right now from these aggregator-led platforms. So I think this is a big boost for, these platforms, and you could potentially see higher growth rates. I think, growth rates for this quarter typically could be somewhere close to 4 to 5% higher for these aggregator companies.
Okay, good to have you on board. Thanks so much then, Karan, and hope you do manage to score some great seats for the Cricket Cup final between later down the line. All right, tell you what, we'll slip into a very short break then right here on the show. We'll be right back with lots more.
Well, it's a good run that the market is having right now. The Nifty is comfortably above 19,500. A lot of stocks which are actually doing well for themselves. Case in point being Utkarsh Small Finance Bank. That stock is higher by almost 8%. SIS India is seeing an uptick of around 7%. Bharat Dynamics and a lot of these defense names on account of the fresh list of indigenization that has come in are also seeing a perk up. Nazara Technologies, that they had made a small acquisition, if I have it right. Shipping Corporation of India, even Cochin Shipyard, Mishra Dhatu, Restaurant Brands Asia, all of these stocks are seeing quite a bit of energy right now, and ditto can be said for Prestige Estate as well. Some losers as well. Navin Fluorine is one of them. The con call did not enthuse the confidence in investors in terms of who the new leader will be, and Marico, of course, which reported a soft quarter in terms of the volumes as well. But is it going to be a soft quarter or not for the consumer durable space, especially with the fillip coming in on account of World Cup? Nilesh Gupta, the MD at Vijay Sales, joining us. Nilesh, we're all talking about how World Cup is impacting the economy, and I'm guessing you also have those TV sales which are seeing a bit of a spike, especially the large screens and all of that.
Good morning, everybody. I think this year it's a double whammy for the consumer durable industry. The World Cup being hosted in India after 12 years, and plus Diwali coming at the same time. And as you rightly said, I think we'll see a lot of action in the large screen televisions. Let me also add to that, the interest in the large screen television has already been there for the last 2 years post-COVID. People have always been going on for upgrade of bigger and better, bigger sizes and better technology. And with this World Cup, I think it's going to peak. So we expect a bumper sales of large screens. And large screens, now see, the definition of large screen is no longer 55 and 65. This year, I expect 86 will also become one of the main stage screens post World Cup and Diwali. Fingers crossed.
Absolutely. Nilesh, are you already beginning to see that? Because, today we're going to kickstart the World Cup, right? Are you already seeing buying coming in for bigger, better screens and speakers?
So as we stand today, I think the inquiries have just started trickling in. The World Cup fever will take action once the India match begins. The first India match is there, and it's a crucial match on Sunday between India and Australia. I think post that match, we'll see the fever catching on. And most important for the fever to gain momentum is a few nail-biting matches. I think that's what is very important. Also, let us understand one thing. We have been now, the viewers have been all used to 20 overs matches, T20s. So they'll take a little time to get used to a 50-over World Cup match. And I think once we get 1 or 2 nail-biting matches, and I think then sky's the limit.
Absolutely, and I hope we will get there and maybe even lift the trophy this time too. But are you keeping any additional inventory, just anticipating, Nilesh, what the World Cup and the extended festive season could bring in for you?
So yes, this year we are definitely in televisions. The inventory is much more than a normal Diwali season is there because the World Cup is there. And not only in the World Cup, it's not only that we'll only see an increase in television. I think possibly we'll see overall people will be staying more at home or they'll be calling their friends also. So we could also see a spurt in the rise of large refrigerators and microwaves and other appliances also, because as it is Diwali time is there, buying time for consumer durables, plus the World Cup. So TV could be one direct beneficiary, but there could be a lot of indirect beneficiary also this year.
A sense as to, what the World Cup brought last time in terms of your overall sales? If you could just give us some sort of a comparison, and in light of that, what is the comparison that you're expecting this time?
So normally a World Cup of this magnitude brings in 2x sales of average, or we always say it's a Diwali sale. Now this year it's 2x because of the World Cup. A Diwali is always a 2x. So whether it will become 4x, which is a little far-fetched, but I definitely expect it to be 2.5 to 3 times. Once again, fingers crossed.
When you're saying it's a double whammy and a double Diwali of sorts for the consumer durable space, what kind of growth rate are we talking about, Nilesh? And I'm guessing apart from screens, people are buying a lot more of those mobile phones, the larger screens, etc. as well. Is that seeing an uptick?
So, as I said, large televisions is going to be the direct beneficiary of the World Cup. And mobiles, as you rightly said, will be the second largest beneficiary, because at the end of the day, the matches are going to start at 2 o'clock during the day and end at night. So people are going to definitely, while commuting and all, watch on mobile screens. So I think that will also be one reason for them to upgrade their mobiles. So as far as growth is concerned, we expect rather, in televisions, we should at least see a growth of 25 to 30% over last Diwali, minimum. That is what the expectation is, but I think it can go more also. On the mobile front, already the growth is happening, and we should see this at least 10 to 15% growth over last Diwali.
Okay, fair enough. And good to have you then, Nilesh. Thank you so much for taking time out and giving us an overall view as to what the World Cup mania could really bring for Vijay sales in terms of trends as well as overall demand. So clearly looking at inventory that's much more than the Diwali season, saying that 2x the average sales will likely be clocked in this time round. All right, let's stick on with the Cricket World Cup fever then and understand as to what kind of a punch it's packing in for the hospitality sector, because this is going to be one of the biggest beneficiaries. Joining in right now on the show is Rajesh Makau. He's the co-founder and Group Chief Executive Officer of Make My Trip. Thanks so much for taking time out. I'm sure there's nothing but a big smile across your face ever since the World Cup announcement was out, because people must have been going berserk, clicking and booking. What's it really been like on the Make My Trip platform?
Yeah, good morning. Good morning. Thanks for having me. No, clearly, like you rightly pointed out, the momentum is very positive. The environment overall is very positive. It's actually two things happening right now. World Cup, of course, and it also happens to be a high travel season quarter for us as well, because typically October, November, December will be almost like a peak quarter in a fiscal year. So clearly the momentum in the demand that we've seen, and we had seen actually, for let's say India featuring matches, pickup destinations like Dharamshala or Ahmedabad or Lucknow for that matter, besides all the metro cities, and we've seen uptake of bookings happening quite early. Normally India is actually not a very advanced purchase buying market. It's a pretty last-minute buying behavior that the Indian consumers have, but specifically the World Cup, because everybody was sort of fearing that the fares are going to go high and the availability is not going to be there. The tickets may or may not be available. Hotel rooms may or may not be available. So we did see, like for example, in Ahmedabad, as the match got announced for India and Pakistan, despite the date change that happened from 15th to 14th, we saw demand for that particular city, for that particular day, going up by 3x, literally, as compared to the, sort of like-to-like period last year. And similarly, we saw in Dharamshala, bookings going through the roof, again, very, very, very high. And this is including the homestays. Like, you will have the hotel inventory going out completely, and you will also have homestays, which we've seen as one of the consumer trends that has been emerging over the last few quarters, especially post-COVID. Including that, we've seen like 2x, 3x kind of growth, and in that particular segment, just for homestays, albeit at a lower base, we've actually seen 5x, 6x growth for the specifically match day bookings. So clearly there is momentum, and similarly on the flight bookings that we have seen specifically for those cities. I think one important point that I would also like to sort of add here is that wherever we've seen more demand and there is inherently less capacity, Dharamshala is case in point. Ahmedabad, relative to all the metro cities, is lower capacity. Lucknow is lower capacity. There, there is lot more sort of push and pull, for the getting the tickets. There is an availability issue, and therefore the fares would also be high. So there's a huge demand and supply gap for those cities, as against, I would say, let's say Bangalore or Delhi or Mumbai or Kolkata or Hyderabad for that matter. All these venues, we have huge, relatively speaking, there's huge capacity, and because of which, we will not see necessarily, this big gap. Again, relative to all the smaller cities where there's capacity constraint a little bit, as much as we would see it in those markets. But overall, the consumer sentiment looks very, very positive right now.
Okay, consumer sentiment looks very positive for now, but the question is, how long do you think this will sustain? Because Rajesh, of course, you're seeing those 1 day, 2 day spikes on the day of the matches, but what about the rest of the quarter? Is the overall holiday demand also that strong?
Yeah, no, I think it's a great question. And like I was pointing out earlier, for us, World Cup is an event, but it is an event and it will be like for specific days and stuff. But more importantly, we've started to see the seasonality pickup that is happening, which typically will happen this quarter as well. So even for that, like our overall sort of quarter planning will be a lot more focusing on how are we going to sort of tap into the high season for a leisure use case, standpoint, more than only sort of getting obsessed about the World Cup. So World Cup is going to be icing on the cake, but we are seeing more the seasonality momentum coming out of the low season quarter. Just to give you a sense, like, there is the summer quarter, April, May, June, which is a high season quarter for us for travel overall. And there is O&D, which is the December winter quarter, as well as, let's say, festive quarter, because a lot of festives are there. And during a lot of these festival seasons over the last many years that we've seen, actually people end up just combining holidays with the festival holidays and they end up traveling. So we are actually seeing that, it's obviously early days. It's just beginning first week of October, but we've seen a good start already to the season.
That's quite interesting to see. So, I'm wondering whether you at your end at MMT have any special offers, packages, anything to go by for, people like us who are going to make the booking last minute, I'm thinking.
Yeah, my first advice to you would be don't think to do last minute booking, because see, it's a question of the demand and supply gap. Unfortunately, for certain places, capacity does get sort of constrained, and we do have right now in the domestic market just a temporary phenomenon for capacity constraint as well, thanks to Go First not being on the air, and even SpiceJet is not necessarily operating at the same 100% capacity as it was pre-pandemic days. So because of which, despite the fact that the other airlines, IndiGo, Air India, even Akasa to an extent, are bringing in more planes and trying to fill up the gap, but the gap is not necessarily 100% filled yet. It's likely to get filled, and we also have, let's say, Pratt & Whitney engines issue specifically as well. So right now, Indian domestic civil aviation market is sort of hit by like 2 or 3 specific issues in the market today, because of which there is capacity constraint, and because of which the fares tend to be high and therefore availability becomes an issue. So last minute, I'm not sure, but overall, on our platform, we will always have, relative to probably rest of the market, we will always have better deals, whether it is packages or, a la carte hotels, flights, etc. Whichever product that any of the consumer would want to see it. And like I was mentioning, that we've also expanded capacity on homestays So if let's say, and there are like very, very good, options that are emerging in pretty much every leisure city, which is if let's say during the peak period, if Goa is going to be really hot for hotels and we are going to just have issue on, the availability, high fares, etc. There is alternative that is emerging in the form of villas and homestays. And we have plenty of them on our platform as well. So I think there will be plenty of options for the consumers and great deals. But maybe a little bit of a planning is needed in the peak season for sure.
And travel stay, and you'll have to help us. But first, I think we'll have to find a way to score those tickets. Have you managed to get some?
Well, I did manage to, but I also did, a lot in advance. I did manage to book at least one trip to Dharamshala because I was very keen to actually see it from that stadium. I haven't seen a game from that stadium, and I was traveling Dharamshala. I went to that stadium, and it was stunning setting. So and then that day I decided that I have to come back and see a World Cup game. And so I'm watching India, New Zealand. Hopefully, if all goes well.
I think it's the world's highest altitude cricket stadium. I think so. I'm not so sure.
We'll probably live vicariously via social media and all of the videos that we see popping up.
But thanks, Rajesh, for making time and speaking with us. Appreciate you joining us on ET Now. But many players powered India's 2011 World Cup win. But there was one player who made a whole lot of difference. We all know who it was, Yuvraj Singh. And as India prepares for the ODI World Cup Battle 2023, which is going to kickstart from today, Indian cricketer Yuvraj Singh spoke to the Times Network's Karishma about the squad, the game changers, and the epic India-Pakistan clash. Listen in.
How are you looking at the Indian team? It's looking good. They've had a 2-1 victory over Australia as well in the ODI series. So peaking at the right time, you would say the entire team?
Yeah, I think so. I had a few question marks on game time. But I think with Asia Cup and now beating Australia, a very good side Australia, and then going in the World Cup will give you confidence. But the thing is that the format is a bit different because straight away you're going to play a semi-final game, so the pressure is going to be completely different from league games. So if India qualifies, it's going to be how you handle that pressure in a crunch game.
And who better than Yuvraj Singh to give them any tips or advice, because the expectation, of course, is to repeat what they did in 2011. But as a player, of course, they take every game one by one. But if there was anything you would say, what would it be?
See, I'm sure the guys have enough advice and enough people talking how to approach it. Indian team is a very experienced side and they know what to do. We have a really experienced captain as well. And he knows how to use his bowlers and his batting side. And the point is that the guys need to be hungry to do it for their senior players. What we wanted to do, especially for Sachin. I personally had a personal goal. So they have to put their body online, have to give it all, because these moments are not going to come back in your life. It's a very special moment. You're playing in India in front of 142 crore people, and we just are going to be cheering you till the end. Just go out there, express yourself, and don't worry about support because you got enough.
And it's also going to be a very special moment for some of the youngsters like a Shubman Gill or a Ishan Kishan who are going to be playing their very first World Cup. So it is going to be a very emotional moment for them as well. Yuvraj, you feel?
Oh, definitely. I think it's going to be a big moment for them. They need to look excited for this World Cup. Looking forward to this big tournament. Ishan and Shubman both have scored double hundreds in one-day cricket. So it's not that they have not seen the highs and the lows. Personally, I think Shubman is in great form, and I think he can be the game changer in this World Cup because he's someone who can take the pressure off the top guys, because I think at the moment he's fearless and he's in really good form. So just go out there and express yourself.
Last couple of questions. Looking forward to the India versus Pakistan match. I know everyone's looking forward to all matches, but that match holds a special importance for all cricket fans.
India versus Australia is also a very important game. India versus England is also a very important game. But I understand the emotions. I think it was. I was watching the television and I saw the welcome that the Pakistan team got in Hyderabad. It was nice to see that because their sport has to bring you together. And India Pakistan obviously is going to be a very big game in Ahmedabad, and we all are looking forward to it. And it's, yes, whatever said and done, it's going to be a high pressure game.